Thank you for joining me. I'm Alex, and I would like to have a look at Johnson & Johnson. So Johnson & Johnson does hygiene and medical supplies, and they've been around for a long time. So current price is $128, which gives them a market cap of $338 billion. Current dividend yield just under 3% with a payout ratio of 58%, which is certainly pretty attractive. They've also been raising the dividend for the past 25 years, so obviously a good thing there. Revenue currently $82 billion, which is up 6%, and earnings of $15 billion, which is up 1,000%. And that is fairly misleading because it's in line with the two previous years, just not the one after that. So the past year it was 15 billion, the year before that 1.3 billion, and the year before that 15, the year before that 16. So pretty much in line with the previous years, just not the last one. PE of 20, also certainly attractive, especially considering the dividend yield. Total assets $153 billion, slightly down. Total liabilities $93 billion, also slightly down. And total stockholders' equity effectively even at $60 billion, which is kind of a rounding thing. Just over 60 billion to just under 60 billion, so no real change there. So as far as risk factors go, I don't think there really are any. You have to vastly outspend Johnson & Johnson to kind of encroach upon their space, and I don't think that really makes sense for any company. So I don't think there's any risk factors, and I don't think that they will cease to exist anytime soon. So I think that Johnson & Johnson is going to be fairly stable for the foreseeable future, which is, 5, even 10 years out. And so that means that considering the dividend yield, which is quite attractive, and the PE, which is quite attractive, and the revenue growth, which, 82 billion, you cannot really grow very fast at that point. So I think that a growth of 6% is really in line with where there should be. And so all of that combines into a strong suggestion for me to look into the stock and maybe purchase it if you're at all interested in value investing or dividend investing. Growth investors obviously will find much better stocks elsewhere, but for a dividend investor, I think that the safety of the stock combined with the balance sheet of the stock, the attractive PE, and the fact that they've been raising their dividends for the past 25 years makes it a really attractive stock for dividend investors. And likewise for the value investors, a PE of 20 is amazing. Not amazing. It's like in line with where it should be, I guess. But also safe company, good balance sheet, revenue actually growing. And so all of that combines into a very strong stock that I think I will be purchasing a few shares of in the near future. So that will be one of the stocks I will be buying in November. And that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.